Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, August 2nd, 2023. Before I jump into the charts, as usual, just ask you to please click like if you haven't already. Also, become a Wicked Stocks YouTube channel subscriber and share the content, if you would, with friends and colleagues. And please check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla report, daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks every week in 5 to 10 minute video format that cater to the 3 to 5 week swing trader out to the 3 to 5 month near term investor, always looking for 20% moves at least on those individual stocks. We also have a 5-day free trial up front. So if you don't like what you see after 4 or 5 days, you can bow out, cancel your subscription at no cost to you whatsoever. So on to the charts. I'm going to jump to this one here. Start with the big picture, work our way in. This is our, I'm going to call it midterm resistance, 293.49. When we closed above the 182.63 formation several months ago, that was our initial big picture target that we are anticipating to give the market trouble in terms of sustaining bullish momentum as we move, through August and into September. We've been testing this area. We even pushed through it substantially on an intra-week basis a few weeks ago, only to come tumbling back later in the week, putting out a key reversal high, actually, by closing below the previous week's low. That was a bit neutralized last week when we closed higher on the week, but still, in terms of just channel dynamics, holding below 293.49 does allow the market to give much of this back into the low 200 area over the next month or two. I'll get to that in a moment. But if we were in the coming weeks to settle above the 293.49 rising channel top, and that does need to be by a 1% margin for long-term line studies. In other words, upper right, you can see 296.42 would be the Friday settlement or higher that would then signal aggressive gains through the rest of the year. The following 3 to 5 months then likely to yield a test of the 414.49 November 21 all-time high. Until then, we can ease back to long-term support, which you could say is about a 20-point range now that begins at 182.63 and ends, I can show the weekly chart, or I'm sorry, the daily chart right here at 204.01. That is the same channel bottom, but on the daily chart. This chart allows us to take a look at the day itself, that 275.26 I'm going to get to here. Actually, I want to take a closer look. There we have it. So this is the upside for the day. 269.85 is our intraday resistance. It is nothing more than the high of the low from about a week and a half ago. We pushed through it. We even opened above it the following day, but we've yet to really close above it. And I still see it as a meaningful intraday resistance area that can contain intraday buying pressures, and is the point that if pushed above today, should then yield on an intraday basis 275.26. This formation still considered able to contain daily, possibly through the balance of the week, buying pressures, and not unless we close above 275.26 do I see a sort of a kind of a reawakening of volatility and a directional dynamic that should then reach into the 293.49 area. This 290.33 has no business here. I'm not quite sure why it's still there, but 293.49 would be expected by the end of next week or sooner. It could be within 3 to 4 days. It could take all the way into later next week. But if we close above 275.26, good low for the week. No good reason to be short through the rest of the week. If your time horizon is 3 to 5 days, it is be long, stay long, back up to 293.49, where you can unload that long position and a sell opportunity presents itself, not only on a daily basis, not only on a 3 to 5 day basis, but also on a 3 to 5 week basis, perhaps, as the market could fall off from here down into the low 200 area, as illustrated earlier. I think that kind of covers the upside for today. Now for the downside, I've got 255.71. Reduce this low settlement price from a few days ago, 4 days ago, to an intraday support level, making way for a possible 251.48 level. I don't expect to see 251.48 unless we break or open below 255.71. So really the way it is, and here, this is a better way of showing it, kind of open this up a bit, 255.71. The upside version of that, I've already shown at 269.85. So intraday resistance, 269.85. And intraday support is 255.71. We could trade inside the 255.71 up to the 269.85 area all day long. But if we break 255.71 today, 251.48 is likely where we can bottom out for the day. I would, under that scenario, like to see the market recover and close back above 255.71. I'll tell you right now that if we close below 255.71, this 251.48 formation is in jeopardy tomorrow. I do think, and it's hard to put that in the support resistance area, but I am verbalizing it right now. Breaking 255.71 intraday, 251.48 likely, where we can place a daily low. I'd like to see the market then recover to close the day above 255.71, because if we do close below 255.71, even if we don't close below 251.48, I do think that this 243.51 speed line is then likely tomorrow. Do I have a chart that actually puts that all together? Yes, I do have right here. So let's just say that closing below 255.71, you should allow 243.51 within a day or two. And certainly if we close today below 251.48, which I think is a long shot, but it is certainly possible. So if we close below 251.48, then I don't really need to waste my breath because the 243.51 speed line in reach tomorrow. So how do I hope I'm making this clear. I'm sure I have, but I will say it one more time. Merely closing below 255.71 would set up a 243.51 target within a couple of days. So that's that. But, on an intraday basis, breaking 55.71, 51.48 expected, 51.48 able to contain session weakness, and we might get a nice bounce out of there by the end of the day. If we settle above 55.71, then we can actually make our way back to the 275.26 formation within a matter of 3 to 5 days. And that is really kind of the dynamic right now, 3 to 5 day scenario. Let's talk one more time about that speed line at 243.51. We're not going to close below it today. I don't even see us closing below it this week. But this is our support as we move into later August. So this is an area, 243.51, that if tested, presents a buy opportunity perhaps back into the 293.49 region, that long-term channel top once again on the weekly chart right here. So if we happen to test, 243.51, we can rotate back up by the end of August or sooner to 293.49. Inversely, if we close below 243.51, we're just another 2 to 3 weeks away from falling to 204.01. So, I'm always speaking to investors and traders who are buying the actual stock. I do get a lot of questions and complaints even sometimes, but I'm not an options trader. I don't know why you're always talking options. This isn't for me. I talk options because I know a lot of you do trade options, or you do in correlation with your stock trade. Some of you do buy rights. Some of you actually trade options exclusively. And so I need to talk to both crowds. It's the same analysis, really. If we break to 243.51 over the next few days, that is a nice buy opportunity to go long Tesla, the actual stock itself, in anticipation of the low 290s again within several weeks. Or you could merely reach for 290 or 295 out of the money calls that don't expire for at least a month. Now, as I said earlier, and I can have continued to say this now for I don't know, a month or two, that once we test and we have the 293.49 formation, we can fall back to channel support in the very low 200s, which is right now at 204.01. So it would be then a settlement to below 243.51 that would tell you that if you bought those 290 or 295 out of the money calls, time to cover them and then reach for 205 out of the money puts that don't expire for at least a month. You might go a couple of months out on that because 204.01 would be expected expected 204.01 rising daily, and later in the month of August actually will correlate well with this February high of 217 in change. So, there is one way to say that if over the next week we close below 243.51, we have really a 1 to 2 week sell signal back to the February high where we could actually bottom out as long as it correlates with 204.01 through the rest of the year. This is a 7-month channel structure that can absorb selling through the rest of the year over the next 3 to 5 months if tested. All of that, once again, and I just hit the 10-minute mark, so I'm going to get off of this soon. All of that a moot point if we settle above 293.49 this week by a 1% margin on Friday. Not going to happen. But if over the next few weeks we do settle above this structure, then all systems go to the upside as we move through the rest of the year. And that is all I have for Wednesday's Tesla report. Please click like, share, subscribe, and check out wickedstocks.com. You have a great evening.